What's up, guys? Alvaro here, and welcome to the bilingual stock market channel again. Let's go ahead and talk about some stocks and about what happened today in the markets. And today we had yet again another red day in the markets, except for the Russell 2000, which went up 0.33%. Nasdaq went down 0.30%. Dow Jones goes down 0.26%, and the S&P 500 went down 0.34%. And mind you, guys, if it hadn't been by Apple, Tesla, and Amazon, today would have been an absolute bloodbath. Because those three stocks, which are very important stocks inside all of these three indices, ended up being able to pull off a green day. But today we had a very negative trading session from a technical standpoint. The crude oil goes up 6.80%, and it closed today's trading session slightly above $100. Very good day for the for oil, and therefore bad news for the bulls out there. Gold goes up 1.04%. Silver goes up 2.29%. The 10-year Treasury yield went down today 1.98%. It was extremely overextended. The VIX went up today almost 1%, and it closed the trading session slightly below 24 points. So today we had the CPI data report coming out at 8:30 a.m. Eastern Standard Time. It came out better than expected when it comes to core CPI, guys, which was the most important metric that we were supposed to be taking a look at. It came out, the CPI, the core CPI, came out reflecting an increase month over month of 0.3% versus 0.5% estimate. That implies, or the core CPI implies, that excluding food and energy, the inflation report could be signaling that inflation could be moderating as of now. However, without excluding food and energy, this report showed an increase of 1.2% month over month, which is absolutely crazy. This is the highest inflation that we have seen in something like 40 years, but if we take a deeper look at the report, we can make the case that both food and energy have a very heavy weight when it comes to the CPI, and those, we can also make the case that those categories are transitory. At least that's what a bull such as myself would say. If you guys ask a perma bear, they are going to say, now inflation is getting out of control. This is going to get even worse. I believe that this is as bad as it gets. So we might see inflation topping from now on, and that's obviously good news for the markets, but we still need to see how the markets end up digesting the inflation report that we got today. Keep in mind, guys, that the earnings season is kicking off tomorrow. The new earnings season, the big casino, opens up tomorrow once again. Tomorrow we have before open JP Morgan, Delta Airlines, BlackRock, Bed Bath & Beyond, and Fastenal. We need to keep a close watch on to the commercial guidance, guys, of JP Morgan and BlackRock. This is going to move the markets tomorrow. If these two banks talk a lot about inflation, about a potential recession in the U.S., I think that we are very likely to see another red day in the markets tomorrow. When it comes to the sectors, today, energy led the way, went up 1.66%, and the worst performing sector by a long shot, guys, financials. As I have been telling you guys here in the channel, financials cannot catch a break. Unbelievable. Goes down today once again, 1.09%. And I want to show you this, guys. If we take a look at the performance of the sectors year to date, take a look at this insanity, guys. Energy is up 42% year to date, talking about the CPI data report, and utilities is up year to date 7.16%. But other than these two sectors, consumer staples is up a bit, not much, only 2%. So other than these three sectors, The other sectors are down year to date, guys. Take a look at financials, such an important sector for the markets. It is down year to date 4%. Needless to say, technology down year to date 14%. So the moral of the story here, guys, is that unless you are investing in either energy or utilities, you're very likely, and I mean, unless you're investing 100% in energy and utilities, you are very likely to be down year to date. It's been a very tough year so far for the markets, no doubt about it. When it comes to the advances and declines distribution, red day across the board again, with 4,000 stocks going down, 4,008 stocks to be more precise, and 3,561 stocks going up. What trades did I take in today's trading session? I took a loss, a sizable loss, let's just put it that way, unnecessarily, mind you, with Facebook yesterday. I purchased a put option of Facebook trying to hedge against a potential negative CPI data report, which wasn't the case. So I cut my loss unnecessarily because afterwards Facebook dropped like a rock. So yesterday I purchased the $220 put that expires on May 27th. I paid yesterday $1,570, and I ended up cutting the loss today as soon as the trading session opened, because as soon as we got the CPI data report, guys, the market started to rally. It ended up being a massive bull trap, and I cut this loss, and I ended up taking a $160 loss over here. However, I took some other successful trades today. It was a very choppy day, actually, so the markets didn't do much other than dropping all day long. So I purchased the put options of the S&P 500, SPY. This morning I purchased the $444 put that expires on May 4th. I paid $830. I actually measured this trade pretty well. However, I obviously closed my position way ahead of time. So I sold out of this put and I was paid $931. I ended up making over here $100. And with Coinbase, guys, I ended up making some bucks over here. Now, but with Coinbase, what's this portfolio? Let me see. In the case of Coinbase, I closed a call option and I also bought back a covered call. So let me show you what happens over here. So, okay, yesterday I purchased the $150 call that expires in September. I paid $3,080. I decided to close this position as soon as I saw the indices dropping this morning, and I was paid $3,177. I made over here $97, and I also sold, this is the same portfolio, I also sold a cover call, guys, in order to hedge against the drop, because I own shares of Coinbase as a mid-term position, let's just put it that way. So I sold a covered call in order to hedge against the drop that we were seeing in the markets. So I sold the $200 call that expires in May, and I bought back this call paying $380. I ended up making over here $93. So I ended up taking 4 trades. I took a sizable loss on Facebook, but I made something like $190 with these 2 calls of Coinbase. I also made $100 with the put option of SPY. So I ended up making $140 in today's trading session. S&P 500, what is going on over here? Goes down today. There is not really much to say when it comes to the indices, guys, because they closed today's trading session for the most part in the same spot that they closed yesterday's trading session. S&P goes down today 0.34%, and it closed today's trading session at 4,397 points. So to the downside, there is a gap that is unfilled as of now, down to 4,370 points. This happens to be a previous area of support back from mid-February, and also a previous area of support back from mid-August. If this area of support happens to be broken to the downside, which could be the case because the RSI of the S&P is at 34 points, and this is something that I told you guys in yesterday's video, we have another unfilled gap down to 4,280 points. This is a previous area of support back from early October. So this would be the bear case, And as I told you guys in yesterday's video, obviously the bears are in absolute control of the S&P 500 because as of now the S&P is trading below all the moving averages. When it comes to the task that the bulls would have to carry out tomorrow, that is going to be taken on 4,460 points. This is an area of resistance in which they failed on multiple occasions in today's trading session. And once I saw the bulls failing at 4,460 points, I decided to purchase the put option that I just showed you of the SPY, and that ended up being a successful trade. Remember that 4,460 points is a level that coincides with the 180 SMA on the 4-hour chart, and it is also a previous area of resistance back from mid-September. As of now, guys, the S&P 500 is almost 10% of the highs, 9% of the highs. So if we happen to see another red day tomorrow, the S&P 500 is going to be re-entering correction territory. Now let's go ahead and take a look at the NDX, the Nasdaq 100, the Silicon Valley guys. Goes down today 0.36%, and it closed today's trading session at 13,940 points. And if you guys remember, I called out 13,900 points as the main area of support for the bulls in yesterday's trading session, and that's exactly what happened today. We saw a sizable drop in the NDX as soon as the trading session opened, and the bulls managed to find support at 13,900 points. This is no coincidence. 13,900 points is a previous area of support back from early March and also back from late January. And this is the same stuff that I told you guys in yesterday's video. If this support happens to be broken to the downside, the next important support is going to be 13,480 points. This is a previous area of support back from mid-March. So this is going to be obviously the most important task for the bears out there. Mind you, the NDX is still a bit oversold with its RSI sitting at 30 points. So I'm thinking that if tomorrow we happen to see a sizable leg down over here, and I believe that if 13,480 points, 13,490 points, something in that vicinity. So if we happen to see these levels being visited in a quick manner by the bulls, the RSI of the NDX is going to be even lower, and that is going to increase the likelihood for the bulls to find support at a previous area of support and then bounce back up. When it comes to the bulls, they need to try to reconquer the 180 SMA on the 4-hour chart at 14,000, sorry guys, 4,000 is the S&P 500, 14,400 points. This 180 SMA on the 4-hour chart also coincides with a previous area of support back from early October. As of now, the NDX is how off the highs? Let me see, guys. The NDX is 17% of the highs, guys. Jesus. And the first stock of this video is going to be Bed Bath & Beyond, a stock that is posting, a company that is posting earnings tomorrow. Bed Bath & Beyond went down today 6.75%, and it closed today's trading session at $17.97. And obviously, guys, any technical analysis that I can break down over here is going to depend on whatever this company posts tomorrow first thing in the morning. However, I'm thinking that this 100-day moving average is a very interesting spot over here, guys. The 100-day moving average is sitting at $18. So if Bed Bath & Beyond happens to post a decent earnings report tomorrow, and taking into account that the RSI is very low, that Bed Bath as of now is very oversold with its RSI sitting at 25 points on the 4-hour chart, I think that any process of consolidation slightly above $18 would be a sign that the bulls are gathering momentum in order to try to fill the next important gap up to the 180 SMA on the 4-hour chart at $20. $20 is also a previous area of resistance back from early December. So if we were able to take this trade from $18-ish or $18.20 up to $20, this would be an 11% profit trade. And the second stock of this video is going to be Robinhood Markets. And full disclosure, guys, I purchased some shares of Robinhood today. Let me show you the position that I opened today. I am going to I will have a very tight stop loss at $11 over here. I purchased 300 shares at $11.96. As of now, I have an unrealized loss of $162. And you guys know that we got good news today when it comes to Robinhood. So Robinhood ended up adding new cryptocurrencies to their cryptocurrencies portfolio. So today, Solana, Shiba Inu, and Polygon were added to Robinhood's cryptos portfolio. We can obviously, guys, make the case that the cryptocurrencies portfolio of Robinhood is still being very limited relative to other brokers such as Coinbase or Binance, needless to say. But I think that this is a step in the right direction. And I just told you that I am going to stop this trade. I am going to be applying a stop loss at $11. And why? Well, because $11 is a key area for Robinhood markets. And why? Well, because we are talking about a former area of support back from mid-March, also back from early March, and also back from late February. So I'm thinking that since we have a very clear lower pivot for Robinhood, and on top of that we have a clear resistance right at the 180 SMA on the 4-hour chart at $12.20, an area of resistance in which Robinhood failed today on 3 occasions, I believe that if the bulls can take on this 180 SMA on good volume and momentum, they are going to be able to fill the next important gap up to the 100-day moving average at $16, which happens to coincide with a previous area of resistance back from late March. So if I were able to take this trade the way that I am describing it, and mind you guys, the RSI of Robinhood is at 39 points, very healthy from a technical standpoint, from $12.20-ish, $12.10 up to $16. This could be a 22% profit trade. And the last stock of this video is going to be Adobe. A very ugly looking short as of now. Adobe goes down today 1.77%, and it closed today's trading session at $426.77. And mind you guys, obviously this is a clear downtrend, technical downtrend. Adobe is trading below all the moving averages. This company posted an unbelievable earnings report recently, and I'm thinking that if the NDX and the S&P 500 for that matter happen to have another very negative day tomorrow, watch out for a quick visit of Adobe down to $410, because at $410 we might see a triple bottom. And why? Well, because $410 already acted as support back in mid-March and also back in mid-February. So I'm thinking that since the RSI of Adobe is sitting at 35 points, already very low, if we happen to see a quick drop down to $410, then we might see a triple bottom formation unfolding, guys, in which case Adobe has a first chance of filling the next important gap up to $448, 180 SMA on the 4-hour chart that coincides with a previous area of resistance back from mid-March. So from $410-ish up to $448, this would be an 8% profit trade, and mind you guys, and as I just said, very ugly looking chart. So if I happen to start this trade on Adobe at $410, I am going to be placing a very tight stop loss slightly below $407 per share. And with Adobe, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember, this is the Bilingual Stock Market channel, the YouTube channel, in which we talk about the markets, but we do things differently because we talk about the markets in 2 different languages, English and Spanish. So you can pick your preferred language, but most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs, just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow, once again, 3 or 4 hours after the market closes. Peace out.